Well, we have Mayuresh Joshi, Head of Equity Research at William O'Neill, joining in now. Mayuresh, good to have you on. So, do you have a budget pick for us now that the dust has settled and the analysis is, pretty much over?
Afternoon, Surabhi. Yes, I think a couple of ones, in fact. So to that extent, I think related to all the taxation and what the impact might be, I think the next few days might give a clear indication on that. But purely going in terms of what the government initiatives are, Welspun Enterprises is one stock that you are keeping on radar on any sort of a pullback. Obviously, I think the key intent of the government in terms of urban water infrastructure, Nal Se Jal Yojana and wastewater management as well. I think there is a huge outlay out there. And therefore, I think as this gets implemented over the next few quarters, because Welspun Enterprises is a large part of the revenue pie coming in from the water business itself, around 77%, a large portion of which is the EPC business itself, which has a decent amount of margin. The rest of the business obviously is contributed from the EPC of roads. So to a certain extent, I think roads, water, waste management, the key areas and focal areas of the government in terms of capex spends. Welspun Enterprise might be a key beneficiary. They've got a very strong order books, will be in excess of 12,200 odd crores. They have been executing well. In fact, a couple of projects that they have recently won, one in Mumbai as well in terms of water treatment. I think that is going to go a long way. On top of that, I think the oil and gas blocks that they have in terms of partnership with the Adani Group, there is expectation of some element of numbers coming in from the first quarter as the exploration starts happening in a real earnest from FY 25-26. That has come off quite significantly. And therefore, expectation of solid earnings growth might very well continue. So, Welspun Enterprises, along with a couple of others, I think if you've got time to discuss, we can do that at a later stage.
Hi, Mayuresh. Good afternoon. And got that view on Welspun Enterprises. What about IDBI Bank? The street believes that this time around, hopefully there'll be some push and the divestment will take place. Stock is up 13%, moving on massive volumes. What's the view at 97 rupees?
Afternoon, Nigel. No, I think it's always been a case of expecting something to happen and it never goes their way. So to that extent, I think I hope this is the year that there is some element of traction in terms of the privatization that we've been all hearing about. Obviously, numbers are still a little bit patchy when it comes to how their asset portfolio is, both in terms of gross NPAs and net NPAs as well. But I think some traction in terms of actionables, if it is undertaken at this juncture, I think that can give a clear picture to the street as well in terms of the timelines in which this will be. Otherwise, I think it will be disappointing and the stock might just revert back to its mean. We have been a little bit more selective when it comes to the BFSI space, Nigel. So something like a Karur, where the numbers in our opinion were very, very good, is something that we continue holding on to our portfolios. And we would be looking out for Axis Bank's numbers. So large part of the expectation in terms of how the advances growth will be, and specifically in terms of how the deposit growth is expected to be, is something that will probably give a clear path. We continue holding this one along with ICICI Bank in our global portfolios.
And Johnson's Control Hitachi in focus. Mayuresh, do you track either of the stocks? Any quick take?
So I think, as Upasana mentioned, I think we'll need to wait in terms of what dynamics are actually coming out in terms of the transaction itself and how is the valuation probably expected to be. Obviously, the numbers for Johnson Hitachi are expected to be a little bit more stable in terms of how the growth dynamics might pan out for the entire industry as a whole. But I'll largely wait out in terms of the transaction details per se.
Okay, all right. Just at the bottom of your screen, Syngene has maintained their FY25 guidance. I guess the street was a little bit nervous on that front, just going by the stock reaction, because the stock from being down close to around 2% has seen a good recovery from the low point of the day of close to around 2.5% after that piece of news did hit the screen. Mayuresh, you want to comment on this one? Syngene now on the verge of moving to the green. I recall it was down close to 2%.
It's a very stable business, Nigel. I think one must understand that when the numbers come in for Syngene, I think it comes in a bulk of quarters and the remaining quarters probably remain a little bit more muted. But the kind of work that they're probably doing, especially in their specialty business, and expectations in terms of the biosimilars as well. There is expectation in terms of also the normalization of the Malaysian facility that they are operating out of. And therefore, I think you probably need to look at this story over a really long period of time, because I think as they are able to monetize a large part of their niche portfolio and expecting that to start delivering consistently over quarters, I think that is where the game change will be. So I think the guidance that they're probably now giving out, the ticker that you're probably putting out, I think it's a good one. Anybody holding the stock should continue holding this.
Mayuresh, what about SRF? We have some flashes that are at the bottom of your screen. Sonal is listening into the con call. What they're mentioning is they've not deferred any kind of the capex plans out there, and they're taking various measures to improve margins going ahead. The stock is not very, very cheap, but your view, it's 2,300 rupees, beg your pardon.
Yeah. No, so I think the capex plans on is a good sign. The other element is out of all the product segments that they work out on, there is anticipation that there will be recovery both in terms of volumes and pricing as we head into the next few quarters. So the gradual recovery that we've now started seeing in a lot of these chemical plays as well, you're going to see an earnest recovery probably start coming through in the second half. As that starts taking place, the leverage benefits will start coming on the balance sheet as well. And that will reflect clearly in terms of numbers improving, specifically from an FY26 perspective. So to that extent, yes, anybody holding should hold on. Our belief is that numbers should start improving for SRF in the second half of this financial year.
Okay, by the way, as we're coming down to the close, there's quite a bit of recovery in several stocks, including banks. Bank Nifty's cut its losses, ICICI Bank, and many of the others are trying to take a leg up. Just very quickly, Mayuresh, of course, we'll look at Axis's numbers in just a while from now. What is your top large cap banking pick?
So, Surabhi, as I mentioned, ICICI Bank remains our top banking pick when it comes to the large private banks. Our belief is still that the numbers in terms of advances growth should continue in a very decent fashion for ICICI Bank. Obviously, deposit mobilization has been a big issue for the industry as a whole, but that should start normalizing in the second half. Obviously, I think the kind of provisioning that they have done on the balance sheet and the expectations in terms of the risk-weighted assets as a percentage of their overall balance sheet as well, I think it's very well managed at this juncture. And therefore, ICICI Bank among the large private banks, and as I mentioned, Karur Vysya Bank, I think those are a very good set of numbers that the bank has posted within the mid-private banks. I think ICICI and Karur remain our top bank.
And very quickly, from the insurers, today there's such a huge I don't know if it's just a relief rally that there's nothing negative in the budget or something more than that. But from the insurers, life, non-life, any thoughts here?
So SBI Life has always been on top of my list. Numbers expected today, so let's see how the numbers come. But in terms of the overall dynamics, expecting their product mix, specifically the protection part of their business, to grow very, very well. The value of new business margins is going to be critical, but I think that is going to be well maintained going forward as well. A little bit more expensive in terms of price to embedded valuations compared to the rest of the pack. But their cost leadership, specifically in terms of their entire outgo, including commissions, is in higher single digits compared to double digits, rather 19-20% for their peers as well. So continuing liking SBI Life when it comes to the life insurance.
Okay. All right, Mayuresh, thanks a lot for that.